My name is Roy Leckie. I've worked at Walter Scott & Partners for 25 years, having joined as a graduate. My interests lie with the investment function of the business, but also our client service offering. So Walter Scott, the individual, founded the business in 1983 with a very clear vision, focused on global equities for an institutional client base around the world, and then with two key ingredients. Firstly, the tried and tested investment philosophy. Secondly, with the right corporate culture that allows that investment philosophy to be best put into practice. We believe successful investing rests upon identifying, researching, analysing, valuing, buying and holding a certain type of company. A type of company that can deliver sustainably over the long term superior rates of internal wealth creation. It's internal wealth creation that ultimately drives investor return. So really, it's all about capturing the awesome power of compound growth. Based on the nature of the types of companies that Walter Scott invests in, we typically offer a significant amount of downside protection during bear markets or stressful market conditions. The companies that we invest in tend to be financially very robust. They tend to operate a long way from break-even levels. They have business foundations that helps them succeed and indeed prosper during the most stressful economic and stock market periods. So a key characteristic of our performance has been that it protects value during down markets. It's really only through detailed, exhaustive, rigorous investment research that we can hope to find the sort of companies that we want to own for clients. Far too much time is spent in our industry trying to forecast or predict things that are way beyond our control, be it economic growth or interest rates or the oil price, or which countries or sectors or factors are going to do well. We really only have two things within our control as investors. That is what companies you own and how much you pay for them. And those challenges are best addressed through rigorous, fundamental, classical investment research. There's been a huge amount of change over the last 20 years. We have a new type of company leading. Obviously, the digital economy is at the forefront of today's investment markets. China is a lot more important today than it was. ESG investing, the focus on ESG, which is a very good thing, it has been a big change. And just the amount of noise and news and data and content that pervades. So we have got to bring a skill set that cuts through that noise, focuses on what's really important, assess it, analyze it, research it, and draw inference from it. Crucially, though, the key focus hasn't changed. Long-term, bottom-up, research-driven investing, stewarding and protecting and growing client assets through time. There's been no change to our investment philosophy, our core investment beliefs, but we've tried to develop and improve the process, how we put the philosophy into practice gradually through time. So, for example, we have housed the research team in a new functional building very close to our existing office. We've expanded our networks across academia, across industry, across a range of different organizations to help us augment our own investment research. We've improved the structure of the team with our co-heads of research and desk assistants to accrue greater efficiency and transparency and lines of communication. So a number of continuous improvements that will hopefully allow us to continue meeting client expectations when it comes to investment performance. The pandemic has brought about an unprecedented amount of policy support, quantitative easing and the like, which has actually served to mask a lot of underlying fragilities across the global corporate sector. So now is not the time to be thinking about investing passively. Now is the time for real discerning stock picking, avoiding balance sheet risk, avoiding valuation risk, being very, very careful about the qualities of the companies that you own. I think what's been reinforced to me time and time again is that as investment managers, we have to be cognizant of the responsibility we have at all times to put clients' interests front and center of all our decision making. I think we need to retain the right balance between confidence and humility in all we do, and we have to be patient. Our investment philosophy works. It requires time, but it works. Clients should invest with Walter Scott today on the basis of, firstly, our tried and tested investment philosophy, and secondly, the strength of our corporate culture. The team today is better resourced, more motivated, better equipped to deliver on behalf of clients than it's ever been.